Good evening. This is the Elliott wave update for the S&P 500 for Monday, November 1st, 2021. In the Globex session overnight, the S&P did again move up and created an additional new high, this time reaching up to 4619.50. So it really got right into that zone and just got past the 1.236 level, which is for that larger B wave. And I'll just take a quick zip out to the 4 hour and we can take a quick look at that, see where this progress is coming from. As you can see, this is the retracements of wave A for wave B. And so we include 1.236 and 1.382 because those are the most common if it should go and become an irregular. And where it becomes an irregular is when it surpasses the previous high of which it's supposedly correcting. So this is not an uncommon factor within Elliott. So I've seen it several times in my own trading, and we've had it a couple times already within these bull moves that we've seen in both the S&P and the NASDAQ. So counting a B wave on the way up, these are the levels to where I think that the market can come. But now I'm going to start to narrow it down again and see if we can't put some definition around how high can it get beyond, if we're, where are our resistance points moving forward from here. So the first one that I want to put on is I want to put on this minute. We're in a minor C wave that began there, and that'll break into 5 waves. And in this case, in an advance, and those are going to be a minute degree. So here are the minute levels, 3, 4, we're in a minute 5. And within this minor C wave, so we're in, and then within that, we're in the subminute 5th wave. So that we've got a lot completing up here. And now I'm going to break it down to within that subminute. We're going one more level down, one more degree down, sub. But I'm just really leaving it that it's a 5-wave structure. Because within it, the 3rd wave, as expected, subdivided. And now I believe that that's what I have marked as such. And I adjusted this a little bit. And I had considered this wave 1, wave 2, and wave 3. But then today, this came down and crossed over, not once, but twice. So it made me look at it again and realize, actually, this could be 1 and 2. And then again, 1, 2, 3, 4, 5, 1 of 3, 2 of 3, 3, etc. 3 of 3, 4 of 3, 5 of 3. So it produces that 3. But I'm not going to go down to another level down below. Because what it begins to suggest is that what we're completing is something much bigger. And so in any case, the 3, this could be 4 or A of 4. And it has additional room we can put in. Whether I consider it, gee, it's too large, too small, whatever the situation is, makes no difference. We can swing back down, right below this, and put in an equal length down, but from this point. So if we go from here, this is a pain. Go there, to there, try to take it up to there. Now we can see coming off where it can get to. The first thing we'd be looking for it to break this current low, which is at 45.86. But my guess is that if we get down to 45.74, still be in good shape, still be within this 3rd, still could be a 4. A little deeper than I anticipated, but that's how the market is acting now. Because again, remember, we're in a topping process. Volatility has increased in both directions. So the moves are quick down, they can be just as quick and ferocious on the way up. So that's one scenario. The other is that wave 4 completed here. and we've got a 1, 2, and now we should be off to the races. So here's how it can play out. And then we'll know if this has continued downside, it really should not focus too much on moving up above 4608, but it shouldn't be heading up towards here. Then and I'll tell you why in just a moment. So if it moves a little bit more, that would be fine. Otherwise, I would anticipate that it turns and starts to drop and doesn't have any problem getting below this hourly 28 and 4, all kind of grouped together right around 4,600. So from 4,602 down to 4,600. So break below 4,600 should pretty much seal the fate, at least on the next hour to two basis, that will come down, put in a new low below here, and likely travel a little bit lower down to that 74 area, and then rally again. And that would be if we don't go up much higher and we turn and then begin to head lower. Now, if indeed this level completed wave 4, then this is 1, 2. It has to really go in the other direction and not have too much problem breaking 46.18 and getting yourself then above 46.19. Now, if that's the case, I have one more level to put in, and we can start taking a look at this at stronger upside, see where it is and what we can expect. I want to open this up again, and I want to add. We're going to add this one, but I want to add this 5. And if that's the case, I need to go. One. Oops. There it goes. And to there, and to there. So now it's that minute, sub-minute 5 that we're looking at. And we've already exceeded. So this again, 46.27, 46.37 for this sub-minute wave 5. For the wave 5, and then we're inside that wave 5. And I want to add one more. And that's going to really throw a wrench in because we're going to have so much overlay. But what I'm now going to do is put in, if this is the 4th wave and it's complete, down here. And I'm going to go down again so that I can really kind of refine it. And I know I'm taking up a lot of time. So thank you for bearing with me while I get this in. And we're going to see where our potential is and where we're really starting to get jammed up. All right, so back out to the 30-minute chart, and now let's take a look at what we got lining up. So these very close on the inside, those are within this move, the 5th wave. And you can see we got 46.23, and then we have 46.23, 46.32, 46.38, 44, 46.53. Again, lining up with 46.60, we have a lot for this level, this degree 5th wave up. So again, we still have stronger overlap now in 46.59. What's going to get it going is that's been the guess all along, but it does have that potential. And that would suggest we're going to go to full Monty in terms of getting up to where this irregular B wave would reach its fullest potential, Fibonacci wise, at 46.60. So I've got another where this small inside 5th would be equal to the 3rd at 46.60. There's a lot that's pointing to here, and then we get real heavy right in here at this level and then just above. So there's three points. The first one is right back here, again, it's going to have bumping heads to get itself back up to at least new highs, 23 to 27. Then it's got 27, 31, 35, 37. Boom, 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 boom. And it's got to block and tackle all of those levels, get up to here, and then just break. Now, that would likely happen. It might pause here, but if it's strong enough to push, it should push right through it as it heads for these. And then maybe that would be it. So again, we're in a fifth of a fifth, and it can push. For sure, it should break 1950, 46, 1950, for sure, because it should create a new high. And we got plenty of places where this could finish up. So what we have, though, we're in that third. Maybe the third only gets up into 18, 19, 23-ish. Then we pull back and then we go again. So, but the strength of the push is going to determine real quick as to what level it gets to. Even though we've got a lot of overlap up here, this might be too much, and the buyers just don't have it. But again, I think this can extend out all this week into next week. We have the Fed meeting. They start tomorrow. We get the minutes, and not the minutes, but we get the result of the meeting plus Powell's press conference on Wednesday afternoon. And from there, we have the employment situation numbers on Friday, a couple other things, and plus some continued earnings reports, which could give us a boost here and there, depending on what they do. So it can actually go either way. And I think that we need to stay open for that right now. And then just work it as we see it during the day, understanding that we have a whole lot of resistance. So I can put this up on a 5-minute chart, just really spread out all of that resistance to make it much more visible. And to realize these tight ones, those are this fifth wave. Right? And now this is what we're looking at. This is on a 5-minute chart. Looks pretty flat to me. So it could be an ABC flat for a B wave, and we get a C wave down. Right, that completes the 4, and then we begin the pattern, and that will change. If we were to break this low and the 4 gets moved down, then of course we recalculate that last Fibonacci levels that we put out. So right now they only stand if the market goes and starts going from here. If it goes down and starts to break down and gets to or close or below 45 to 86, then they'll be recalculated. But on the way up, plenty of resistance, and you can just see it. It just gets thicker by thicker as we start moving up, and then we start to overlap. And it all works. So that's where I'm going to leave it for tonight. Breaking down, we've got all our levels and the moving averages. Continue to trade using your moving averages and the Elliott and the fibs. And the next update will be Tuesday, the 2nd.